Welcome to this edition of Fuel for Thought. I'm Kristen Balasia, Vice President of Consulting Services at S&P Global Mobility. In today's episode of Fuel for Thought, we'll be discussing the 2022 wrap-up, what a year it's been, and see what's coming in 23. I'm pleased to be joined by Colin Couchman, Executive Director, Light Vehicle Sales Forecasting, and Chris Hopson, Principal Research Analyst, Light Vehicle Sales. Good morning, gentlemen.
Hi, Kristen.
Hi,
Hey,
Kristen.
Colin.
Thanks for having us.
Hi, Chris. Happy to have you. So let's get started. Listening to your webinar last week and living through 2022 up to this point, it's clear it was a challenging year. We had continued headwinds from, it seems like almost every direction, although every time we say that, we see a new direction of challenges coming at us. We have continuing COVID impacts around supply, labor, China lockdowns and policies, and the added impact of the Russia-Ukraine conflict as we started the year. However, we're expecting, some modest growth in 2023 from what I'm hearing you guys say. In fact, about a 5.6% increase in global new light vehicle sales. But with a strong undertone of, I would say, maybe caution, uncertainty, variability. That's what we're going to be talking about today. And you too, as forecasters, that's what makes forecasting so fun, right? So Colin, we'll start with you, and maybe let's just take a quick look back at 2022 and wrap things up, and see what the stage looks like as we're going to be entering 23 here.
Okay, good stuff. Thanks. Yeah, so we're approaching a sort of gloomy trio of anniversaries, really. We've had 3 years of COVID, it's still with us. You mentioned China there. 2 years of semiconductor disruption, more or less, and getting on for, a year of Russia-Ukraine war impact. So the outlook is mixed. We have had this concept of destroyed demand in the forecast for some time, as sort of, the economic side of it, the higher interest rates that have come through, still tight supply chains, intensifying affordability squeeze in some markets in particular, especially electrification. We'll get onto that a bit later on, perhaps, and clearly, very much weakening consumer confidence, largely on the back of some of those cost of living concerns here in Europe, especially around energy prices, and to a certain extent security of that energy supply as well. So, there's lots of headwinds clearly, but we still have a bit of pent-up demand in the system there. We still have some of those supply constraints, so delivery of vehicles, logistics, and some of the flow through into sort of a more normal pattern of demand is still challenging for us, and some of that should work its way through in the coming sort of 6, 12, 9 months, something like that. Full year 2022, if we think back, just to set a number for us, we think that's going to hit something like 79.2 million on a globalized basis, and that's about a 1.3% decline from where we were in 2021. So a disappointing year, really. We were looking for a more positive recovery, if you like, than the negative one there that was delivered, and really, it sets the scene really for 2023 to be a year of recovery, very, very cautious one, especially around some of those headwinds and how quickly they alleviate themselves.
That's great. Nice summary. And I like to hear that you say with, 2023 could be a year of recovery. So Chris, if we look at US specifically, can you talk a bit about 22 and what we'll expect to see in 23?
Yeah, thanks, Kristen. I think that it was a great kind of wrap up of the year and what we're looking at. And I think an important point, not just for 2022, but the issues that were prevalent in 2022 are not easily adjustable, as we kind of, and we don't think they're going to be quickly resolved as we move into 2023. Whether it be those supply chain constraints and challenges, even beyond semiconductors, and enter now our new economic uncertainty and potential economic slowdown beginning of the year. None of these are going to be quick to move through the system again. So, on the bright side, the end of 2022 in U.S. demand levels, I would say was some apparent steadiness. Now, that's, if you're an optimist, that could be construed as something that's good because we didn't go down, even though we were faced with some of these, continued uncertainties. But pessimists could also say that we saw inventories rise and we haven't seen sales really dynamically move in the same vein. So the steadiness shouldn't be be misconstrued as exuberance. And as we look to 2023, I think the consumers will play a very important role as how we move through the year.
So then coming back out from the US, Colin, a term we don't use as much anymore, was always the BRIC countries, right? And it seems like we've seen what's happened to a few of those, and the one that really seems to stand out now is the India story there, and the growth and potentially the future direction that market's going in. Can you talk a little bit about that and what we could be seeing and why?
Yeah, sure. So yeah, India is a very interesting market. It's one we don't focus on too much because it is sort of quite self-contained, if you like, in terms of both production and demand. You've not many exports, not many imports. It's a sort of fulfilling market in a sense, but it is big. It's actually the third biggest market in the world. So mainland China, USA, and then India. And in 2022, it's on for about 4.4 million units of sales. And in growth terms, that's about over 20% higher than what was delivered in 21. So there's lots of excitement around it, lots of momentum. Everyone's looking for growth, especially with some of the challenges that we're seeing in China. There are a couple of drags, so we are still expecting growth this year, 23 year. But there are a couple of drags. There's the two R's, so-called two R's, so regulation and repo rates. So regulation, there are some extra on costs coming to vehicles from some Indian CAFE regulation, so it adds a bit more cost to vehicles, especially around real driving dynamics and stuff like that. And then on the repo rate side, that's interest rates really. So interest rates are very important for India because it's obviously a very price sensitive market because people have sort of more constrained incomes and things. But also, 90% or so of vehicles are financed. So as cost of financing goes up, there's obviously a direct impact there on affordability and lengths of those loan terms and things like that. But we're cautiously optimistic on it. We've penciled in a forecast around sort of 4.57 million for 23, and the foundations are there for a reasonable growth momentum to carry through from 22 into 23.
And Chris, Colin mentioned some of the issues in India. We talked about some of the global issues. What do you think are the most critical issues facing the US market specifically right now, and where do we see the most volatility?
Yeah, and we'll come back to that in the framework of U.S. demand levels moving into 2023. We are cautiously optimistic, as Colin said, and specifically for the U.S., as we think of where we're moving from an economic standpoint, a penciling in a mild recession. On the bright side, the auto industry here is being viewed as a nice counter-cyclical balance to what's going on in the overall general economic narrative, meaning that we do expect production levels to continue to increase. Now, the risk is that there's still supply chain pressures, but we do assume that they will progress mildly, even as the economic conditions are expected to deteriorate. Now, I brought up consumers as being, the question mark really and the risk overall. But as we think of advancing production levels, one of the limitations of 2023 growth, or the overall decline in U.S. sales, is that we didn't have enough inventory. So what happens if we move production forward and we grow inventory? We have potential for consumers to come back. Also, at in the same vein for U.S. demand levels, um, we have some structure there that might not be the strongest structures, but retail order books, this recovery stock of vehicles, and a fleet sector that remains starved for product. Those are dynamics that are underneath our cautiously optimistic outlook for U.S. sales, which is projected at 14.8 million units for 2023, which would be a 7% increase from 2022. But these are not strong structures by any means, and any kind of downward trend in some of these supports could loom over and provide a risky balance and still volatility for the market for sure.
Absolutely. And the other thing that we haven't talked about yet, which, has to come up in any automotive conversation these days, is EVs. They're coming, right? They're designed, they're being advertised, they're starting to be built and shipped. There's certainly still some stated lofty aspirations, but interested in really both of your perspectives, globally, and Colin, you in Europe, Chris here, you in the US. Um, are OEMs going to be able to do this and scale in time profitably? Will consumer demand hold up, considering the pricing and still some of the hesitation? What do we think that's going to do to the global sales or regional sales stories? Maybe Colin, I'll ask you to take a run at that first.
Yeah, sure. Yeah, I mean, it looks unstoppable. It's certainly one of the most dramatic trends we're seeing, for many years. And this year saw many OEMs actually doubling down on their ambitions for electrification for the coming sort of 5, 10, 15 years, and some really quite dramatically scrambling to sort of catch up in terms of the ambition. We've seen recently Toyota, Mazda, some of the others who haven't made as much of this as others, really pushing some pretty key messages there. And also from the policy point of view, you've got the NEV policy in China that's rumbling on. Europe Fit for 55 from the European Union there, some new sort of input factors from that. And obviously the USA Inflation Reduction Act, the IRA, is also sort of moving the goalposts. And so we can see, electrification is firmly embedded in what the policymakers are looking for the sort of greener future for mobility. I mean, we really have to respond as forecasters and try to fully understand what's going on. We do have a forecast for next year. We think from the sort of battery electric passenger vehicle point of view, we're on track to hit almost 10 million units of sales for 2023, and that would represent about sort of 13.3 or so % of global passenger vehicle demand. But clearly, there are challenges built into that outlook.
Absolutely. And Chris, what about the US specifically? And maybe that's also a good segue into EVs and maybe some thoughts on the IRA impact.
Yeah, just to kind of support what Colin has covered. I mean, the question there is, the growth rates, pricing pressures, can they get it on time? That is still debatable. I think just looking at the amount of money being announced by automakers to help support and develop and produce EVs and across the supply chain and vertical integration is quite staggering. And again, being guided by, as Colin said, the regulatory environment first, then bolstered by consumer acceptance. I mean, the trend's irreversible. The wheels are in motion. I don't know how things kind of develop, on what trend they develop is a question. The trend is there. How we get to there is certainly to be debated and to scoped out. And certainly the level of execution and delivery is to be determined, but we'll go a long way in see how far we go. And to that vein, one of the part of the frameworks, as you mentioned, IRA, part of the framework that for electrification levels in the United States has always been the need to have incentives to help get us across the gateway and into further acceptance. The IRA certainly solidifies the framework and federal support for this. Certainly, some of the details and implementation specific to the vehicle incentives, whether it be the battery component, battery materials more specifically, continue to be hashed out by the government and debated by OEMs. But overall, the IRA should be help and support and enhance the development of electrified vehicle adaptation levels. And I use electrified because this does now cover both BEVs and plug-in vehicles. So that's something from a plug-in standpoint, which could see some additional impetus, especially in the short term. But to go beyond just what's going to happen from that mix, we talked a lot about onshoring. A lot of announcements have come. Part of the bill was to have the North American supply chain supported and enhanced, and onshoring of production for some of these vehicles to North America is something that we are hearing more reports coming down the line, trying to implement into our forecast. So that is a very large part of what's happening and impact from the IRA specifically for North America. It would likely more information and more developments to come.
Absolutely. So certainly a lot of what we've seen in 2022 will in some ways move into and impact 23. But what I'd like to end with is if each of you could think about 2023 and describe it in one word, what word would you pick? And Chris, I'm going to pick on you first.
And that's okay, because I feel like the tenor of my statements here is cautiously optimistic. So if I was going to use one word, it would be challenging for both forecasters and the auto industry alike in 2023, unfortunately, once again.
Okay, thanks. Colin, what about you? And you
One
can't
word.
pick the same word.
No, one word. I'm going to go with hopeful.
Hopeful. I like it. Okay. All right. Very good. Well, thank you both for your time. And with that, we will end it there. We'll be back with more Fuel for Thought next month. To opt into our newsletter that provides more information on this topic and others, please visit spglobal.com/mobility.